I'm not sure how loud the jazz is, but as you see, your boy got a new haircut. You know, we're looking nice and spiffy. I don't. This is like a little bit too much. Like, oh fuck. Okay, this is like a good amount. Okay, so basically today is Wednesday, August 19th, and I did go into the charts this morning. But I didn't really. I don't really remember because I just got off work. Well, I got off work maybe like a couple hours ago, but I went to go see my girl. Went on lunch. You know what I mean? So, anyways, I feel like I should talk to the mic more. I've been watching this like these VAW reviews, and I'm just like, you know what I mean? Like, you guys can't really hear me if I'm like all the way over here. Like the audio is a little fucking weird. So, I'm gonna start talking to this more. I feel like that's better. Um, but yeah, I just want to go into the day. I do see how there could have been a trade, but I didn't hop on the charts strictly because there was another engagement of a swing, and we're gonna see how that played out today. So, let's go into it. So I'm just make it right here. Hope you guys can see me still. There you go. Okay. So going into the trade. So let's see. We are on Wednesday. So let's just do this. So as you see, it's kind of like a doji candle. We're very indecisive on it. We did engage a swing, which is going to be this one. So this is my failure swing right here. This is my true failure swing. As you see, we have space here, space here, space here to this one right here. And then we have enough gap right here to be this one. This is our previous failure swing, but obviously that one got closed through. So that's going to make this a continuation candle. So my sister's home. Might have to pause this real quick. But this makes this a continuation candle because we are delivering from that relevant swing. And I am going to have to pause this. My dog's going to start tweaking the fuck out. All right, we're back. I'm just going to edit those two parts in because obviously I couldn't fucking do the thing. Let me see if I can do it now. Nope, still not. Okay. Anyways, I got my coconut water. All right, now let's continue. Okay. So we are delivering from this relevant swing here, which led to one down candle, two down candles, and this one's a very big expansion candle closing below this range right here. So that means we want to continue with this candle, probably targeting this low next. 7 hours time frame now. So my bias on the daily time frame is now bearish. And now we engaged it at 3 p.m. And now let's see how 10 p.m. does. We engage that low, and we kind of have an indecisive type of range. We have these highs get engaged. We have that low get engaged. It is a bullish candle. We just engaged from a bullish low, from the most relevant low. That means that either we want to respect this range or reject this range. So now we got to do a different top-down analysis. So because we engaged that low, this one right here, and we are rejecting off of it, gonna want to target this high now. So this is going to be the high to target for the day. And then we also have that equilibrium range right there that we could also target because that's also an invalidation of that range. So that means we want to go to the invalidation of the entire range. So that's what we're going to want to target. So now I'm going to go down to 30-minute. And since we're engaging off that relevant swing, this is why I completely close up the charts, because usually we start consolidating when this happens. So let's see if we can find a C2 or C3 going higher. We get a 5:30 push. 6 a.m. coming down. Okay. So right here, I don't really see anything that says C2 or C3. But like post 5 a.m., we don't really see anything like that. We just see expansion higher. We do have a change in structure. So a change in state of delivery. That's the signature right there. So I kind of want to stay above that line now and not come down. And here's where you're going to start to see, we already took out that target as you saw, and now we want to come up. So if I want to come higher, I really want to go all the way to this high right here. We have this high to target. We also have this high to target. We also have this high to target. We have all of this resting liquidity within that downtrend to just target. This is a bunch of trend line liquidity. If you don't know about it, go learn about it. It's just a bunch of highs in a series of trends leading down or up, and those are going to be lows. Anyways, yeah, I want to stay above this range. I don't really want to come lower than it. But this is our equilibrium. And if we do come lower, I want to see rejection off that low. So now we go down to the 15-minute. Do we see a C2 or C3? No, but we see a more refined approach for a CISD, which is this one right here. So I would say this is going to be the change in state delivery, which is the highest high right here of down close opposing candles. It's a very good lengthy body. We closed above it, so that's where I don't want to really return to. So now we're going to go down to 5-minute. Let's see what market wants to do. And we start expanding lower. Do we respect that range? Right here, we close through it. And since we want to go higher, because we are engaging that low, I do want to see us reject from this low and see some sort of low, what's it called? Short-term low get ran through, and then we move higher. Because now we're at 7 a.m., so I want to give this a couple of candles before we do anything. So we have that short-term low. Let's see if us reject up from it. Good. That's really good. I would love a C3 closure. We're probably not going to get a C3 closure, but is this a low that we swept? Yes. Okay, so we swept that low, and if we could get a C3 closure above here. If we get that, that'd be a good signature to go higher. Fourth candle. There we go. So this right here probably would have been the trade for today. And because we did run out that short-term low, we do have that sweep of the engagement. We did disrespect that range, but this is like B+ setup because this is not a change state delivery. We have 3 opposing candles right here. This would have probably been the most optimal one to close through. So we could do that too. That would make it an A-, but even then we are engaging from different types of ranges. We're expanding from different ranges. We have all these different things going on. So honestly, today was clear to me, but could be confusing for me like a couple months back. But it's because I went through a bunch of this shit. This makes sense to me. So I would probably target a 2R here because it is probably a really good fill. We're targeting less than this range, so I would be okay with targeting that. And we would see if this plays out. Okay, I think we targeted, I think we hit that 1.5 yet. No, not yet. That 1.5 range, it's like this right here. Because we have that high right there too. I always like keeping highs in mind rather than just targeting 1.5 because those are very important. So right there probably would scale once we hit that high. Just give it a minute. Boom. Right there I would scale. Probably scale a half. And then fully target 2 for this entire range right here. And then I would just absolutely hold to at least this equilibrium level or this range up here. So we could just hold all the way to here and then just trail. And then we'll start trailing aggressively once we hit this high right here. So this would be my approach to it. All right, and let's see. So let's just wait. My stop right now currently would be probably right here. I don't really want to return to that low. And then bang, we get stopped out. And do we go higher? Consolidation. So we do hit a 1.5, but we never really hit a 2R on this trade. And we just consolidate for the rest of today. This is actually right now. This is currently right now. We're still resting within this entire fucking range. So, with that information, this is why I don't trade these days. Just because this is not something I would optimally trade. I don't like when we're engaging off two, when we are continuing off from one swing and we fully expand to the next swing pre-market, because that leads to post-market or during or New York Open consolidation, which leads to swings like these, creating an open range and then creating a neutral range that we just stay in until Asia or London engages one of those things, and then we continue with New York. So that's kind of just my market knowledge on how we went into today. Today would have been an okay day, just like yesterday. You still could have won 1.5. The reason I scaled there was because of what the engagement was. Even that is like B+/A-. With discretion, A-, B+ just purely mechanical. But yeah, honestly, this is just like nothing to really go crazy about. I only want to take A+ trades. So I literally, honestly, my sleep has been so much better because I just look at my phone. I know exactly what to look for, and I go back to bed. And that's why finding data within your strategy is so fucking important. Like, if I had to just sit and talk about how important data is for getting your strategy correct, I would talk for hours. Because getting data about not only your strategy, but how you execute it within the market and what you naturally look at and what you naturally are bad at or good at is so important to how you are executing the strategy and how you're going to make money. So the reason I don't trade days like this is because I know that after an engagement of a swing and we expand lower pre-market or post-market, whatever the fuck, and then pre-market during the next open, pre-market of that, we engage the next swing, which is our target for what we're doing. That is completely something I do not want to really get into, just because it's going to consolidate, as you see right there. We create an open range and we get to stay in between it the entire time until eventually we will target the next swing. But this is setting up for a really good trade probably later on in the week. I expect probably tomorrow we'll have a good trade, and Friday we'll probably continue that trade. So with the daily, if I want to zoom out real quick, I can probably provide my predictions. But yeah, let's just see where we're at right now. Exit of that. Okay. So with tomorrow, it looks like we're really moving from this range right here. So we've had basically three expansions lower. This can be considered an expansion. But we had three expansions lower leading into a sweep of a low and a long wick that can lead to this invalidation point, and now a push higher. This relevant swing here, let me just make my shit a little bit smaller. This relevant swing right here, because it's so far from here, and then this one is so far from here, I would probably be targeting this. So if market pushes up and we're like a good lengthy amount into this fair value gap, like honestly, I want to see a really big push above this high. And then the 7-hour framework to push bullish, because this is really, really good. I don't want us to just tap into this and then just instantly like come lower. Like, I don't want to see that. That's not something I'm looking for. That's not something I want to happen, because tomorrow that would be a really good Thursday counter with three expansions lower, Thursday reversing, and Friday continuing that reversal, because we have so much liquidity. We had these equal highs resting here, which is probably why we're rejecting off of this. But the fact that we're rejecting off of this low right now and pushing higher tells me that we have some incentive to push higher and have a bullish narrative. So I really want to see us come to all of these highs to run out all-time highs, because S&P 500 is on all-time highs. Dow is on all-time highs. There is just no reason why I don't believe why we shouldn't run all-time highs right now, just because it makes the most sense for us to finally enter that range during this latter part of the year, going into the last 6 months. So within this last, I would say it's a semester, right? For this last semester, I believe that we're probably just going to pump all the way through. I think we're just going to go super, super high based on just the framework of everything. We already have a super big expansion. We tapped into that range of equilibrium right there, just right below it. And now we're probably just going to run out all of these. But this is a very healthy retracement after this expansion right here. So this is really good. I'm sure, yeah, we have a SMT, a protected swing right here, which shows also bullish incentive. So this is looking really good. We have that protected swing. If you want to call it a protected swing, I will call it a protected swing just because it is a divergence. But I do believe we're going to have a bullish narrative for the rest of this week. I think Thursday is going to be a trade, so I'm going to go to sleep early tonight, and Friday also as well. But it's kind of been hard to like stick to a starter routinely, you know what I mean? Because it's just like hard as shit. I can't get into it. I'm not a consistent type of person, but you need it for this thing. So anyways, that was kind of my market analysis for today. Tony, if you're watching this, keep your head up, keep going. It is what it is at the end of the day. Shit. This shit ain't everything, but it gives you access to what you consider everything is. Boom. Drop that in the fucking quote book. All right. I'll catch y'all later. Deuces. If somebody's watching this, I hope you learned something. If not, stick around for the next video. You might. Deuces, bye.